Hi there, how are you? Welcome back to M Talks. I would like to start by wishing you all a safe, uncomplicated, and a blessed 2022. Things are getting different, things are getting difficult. So I think it's time we look at security for us and for our families a little seriously. So, from that perspective, let's talk about investments. And we talk about investments, there are some things which are very important that we need to follow. What I call the 10 commandments or the 10 things that we should look at seriously when we're looking at investments. Let's start with the first one. This may be simple, but believe me, this is the first step. Like they say, the first step is the start of a journey. So we need to take the first step. A lot of us think about, okay, I will get my bonus this year, I will get my incentives here, I will do this, I will sell this, I will take this money, then I'll start investing. And believe me, those things, they just keep dragging on and on and on. So even if it is a small corpus or a small capital, start investing. That's how you begin the journey. Second thing, in my mind, is the most important thing that you have to consider before starting with your investment. What is it that you want out of it? Forget about X, Y, Z, some friend, somebody doing this. Forget about all that. Even for the time being, forget about the investment options. Look at what you want out of your money. There is so much you want to put aside, how much returns you want for it. That's an important decision that you have to make for yourself. Third, look at the time frame. Look at how long you can set aside the money for. Again, very important, because the longer you put your money aside and you kind of forget that even exists, the more you can expect the money to grow, the more you can expect in terms of returns over a period of time, because short-term investments or speculations, as they call it, normally do not produce good results. It may be okay, it may be interesting to start off with, but in the long run, speculation does not work. Investment would be the best option, which by definition is a long-term option. Number 4, you have to, before you start investing, analyze, take some time, spend some time, put in the work, understand the different options available, whether it's the stock market, mutual funds, real estate, angel investments, whatever it is that you think is good for you. Take some time, because for you it is better if you understand what you're going to do instead of just taking inputs from people. It's always better. Take some time to understand the different options and then move forward. Point number 5. After you understood these things, like in terms of how much money you want to put in, what you want in terms of return, what is the time frame you're looking at, and then you've done your study, you will be able to arrive at the most suitable investment options based on these parameters for yourself. Okay, but once you get there, what you need to understand then are the costs involved. If it is a stock market, there is service charges. You have, if you want to keep your stocks in a digital form, you have to pay for that. Or there are these transfer costs, so many other associated expenses that you have to understand and you have to budget for right up front. Point number 6. Remember, this is your money. So you need to set aside some time to review and course correct. Depending on the type of investment that you're going with, be it the stock market, mutual fund, real estate, or whatever the case may be, identify a time frame by which you would review the investment. Maybe every 2 months or maybe every 15 days, depending on how much time you can allocate for this. But it's important to review and course correct. If for some reason the investment option that you chose is not going in the direction that you expected it to, the review will help you understand how to course correct. It's very important that we need to do this. Point number 7, if again, God forbid, for some reason your investments are going south, do not be afraid to cut your losses. Cut it then and there. Don't expect it to grow like, let me wait for some more time. Maybe it'll grow. This is all hope. These things, you never know how they turn out. So if there is a situation where you feel it's not working well for you, cut your losses and move on. And most important, do not average out. Some people, what they do, when some things go down, the prices, for example, in a particular stock they have invested goes down, they put in more money, thinking, okay, when it goes up, I will actually either average out or I will get better returns. These things normally do not happen. A lot of people have lost their entire corpus or capital, doing this kind of a thing. So kindly avoid, be brave to cut your losses. It's always better. Point number 8, on the flip side, if you have achieved your target for some reason much earlier than you anticipated, exit. Book your profit, get out, because till now, till the time you exit or actually book your profit, what you see is profit on paper. You really haven't realized it. So please exit. If you've hit the target, get out. Point number 9, again, something which I believe is very critical, very important. You have made your investment. You put your money in a particular investment and it's probably not picking up and growing as fast as you expect. You always have a tendency to look around. There will be some news talking about something new coming up. This is doing better and that is doing better. So we always, have this mentality to try and switch to see maybe, okay, this will work for me. It's better to avoid that. Because again, if you've done your research up ahead, if you understood your investment, if you understood the cost, if you understood the time frames and so on and so forth, don't jump ships midway. That's never a good choice. Okay, so if you maintain these disciplines, in the long run, you would definitely make money. I am sure of that. Point number 10, this is more a housekeeping thing, but nevertheless, very critical for a long-term investor. For somebody who wants to be in the business of investments, it's very critical. Take care of all your statutory and tax requirements. Make sure you budget for that. Make sure you file them. Make sure you capture them and do whatever is required. Because, if you're going to continue onwards for the next year in a similar fashion, or, after 2 years of how much ever time you've allocated for your investment, these things become important. Plus, what happens is it also, gives you a good standing with financial institutions. Tomorrow, you might want to hedge your investment with a bank, raise more money and invest further. That's another option that we will talk about later on. But these are things, opportunities that a lot of big investors utilize, and they actually grow their portfolio and make themselves really big players in the market. So if you want to do, or if you want to become such a player, make sure you take care of your statutory obligations. That's very critical. I do hope you benefited from this video. Thanks for listening to me. Stay safe, stay healthy, stay happy. Bye for now.